What's going on, guys? My D&D was canceled for tonight, so I figured that I would do some a little on-demand thing, maybe talk about my zones and stuff while I do it. I still get a lot of questions about how I do my zones, to a point where I'm not really sure. It might just be something that I'm so used to that I find hard to explain or I don't notice. So hopefully I can go over it in this kind of semi-live, on-demand environment, and kind of talk about what I'm thinking about as it happens, and maybe that'll help. Maybe not, but we'll see. So the first thing I do when I want to do on-demand practicing is I come here to precision day trading. Now this is every morning I will open up, as you can see, all the mornings that I've traded. I'll open up this when I wake up, usually about 7 a.m. Central Time. And it'll be, right around here. And I will look at the stocks that are up here on the small up gappers, and I'll take down anything with significant volume, usually anything above 1 million volume in the pre-market. And then I'll keep it up and periodically just kind of thumb back over it throughout the day to see if there's anything that's breaking out or showing up on here that wasn't on there previously. Now once I add all these, so in this case we would add 1, 2, 3, 4, 5, 6 names, and then I would look through their charts. Anything that's not in an uptrend after the open, I would just remove from the watch list and narrow it down that way. So we're gonna just pick a random day I didn't trade. 30 months ago, I guess. And here, let me move it over here so I can move it to the watch list. We'll have to fast forward a bit. Okay. Yeah, whatever. So this is February 16th. So go up here to on-demand, on Thinkorswim, and we will we will change the date to February 16th. And we'll do it right at 8:30, right at 8:30. So now what we do is we build our watch list. So we'll do SCKT. ALJJ. TRCH, MYT. MYT, LKCO. SOS. Ford, Sesson, Ford, SESN, and SBBP. Okay, so once we've done that, we got our watch list together, we will just start looking at the charts. So let's start at the top here. Okay, that looks pretty good. Go ahead and hit play so that it is moving. Now on-demand does kind of move sluggishly. It's definitely not as fast as live. But so it looks like a good ticker to watch throughout the day, although I definitely wouldn't take it anywhere near the open. The only reason I'll take a trade under the open, or I guess my favorite trades to take near the open, because I don't trade for about 10 to 15 minutes till after the open, are tickers that are breaking out pretty high above where their pre-market levels were, or their most significant pre-market levels. Because I like to be able to chart pullbacks utilizing pre-market highs. I feel like it's a pretty good high probability setup. I like it a lot. But you see here that it would take this ticker breaking out significantly in order to be able to come back down and utilize these levels. Sometimes the opposite is true, and these levels end up becoming like resistance levels, which is, obviously not good. So we might look to revisit this ticker, 837 down to, shoot, is that too narrow a range? I guess not, because I could have a definitive stop here at 7.7. And that would give us that range, yeah. So we will look out for, a little bit later in the day, maybe a retest of this area here. Profit targets would probably be, first one is we'd have to pay attention to would be right here. The next would be this level. So that's what we'd be looking for. We're not going to trade this one right away. We're just making those levels, giving us a good area. Now, why did I choose these levels? Well, typically on the 10-minute chart, the bodies are where your true resistance is going to be. Like these wick ups, like you can look over here on the 5 and the 2. Let me pause it really quick so time's not moving. You can look over here on the 2 and the 5, right? And it looks like, even though over here on the 10, you see that the bodies clearly tell you that this 836 level, 835, I'm sorry, is where the resistance was, right? These peaks, these wicks are where price kind of broke up over before being pushed right back down. Now over here on the smaller time frames, you'll see that there's some bodies and action happening above these lines, but the 10-minute chart takes into account a lot more information on average than these do, right? So I tend to, when I'm identifying bodies, use these as a bit more of a harder resistance and any wicks as a lighter resistance. So, you know, the stop loss is fine where it's at. Maybe the bodies down there would give me a safer zone with some more consolidation. So one thing you have to take into account is the range on the day. What's the ticker's daily range? Well, I mean, it's pretty significant. This is up, damn, over 100%. From $3 all the way up to 200% even, to 10.5. So do I really want to give myself a zone that's, you know, right there, 837 to 815, that's 20 cents, right? Well, in the grand scheme of how much this ticker has showed me that it can move today, you know, that might be a little overly conservative. So what I can do is utilize exactly what I just mentioned with these bodies, the true, quote unquote, true support right here, where you got 2 wicks, 2 bodies, a lot of touches on this, near VWAP at the time. You know, that could be a potentially better key level. Now, do I want my stop loss now to be, you know, what is that, 20 cents? You know, 20 cents is a fine risk to reward for sure, but, you know, again, we got to think about what this stock's daily range is capable of. And so far, it's showed me that it's, you know, it's capable of quite a bit. It can do quite a bit in a single candle, single 2-minute candle. So is 20 cents safe enough for us to definitively know that we were wrong, but also give us the room that we need for the stock to do what it's going to be, its natural moving up and down? Probably not, right? So I would like to move it down here to this level, 7.5, which gives us, you know, about 35 cents, a bit more wiggle room. You know, if it does fall below this level, we already know that these low of the trend levels are being taken out, the bottom of that trend. So we can, you know, identify that as well. But, you know, even if you mentally want to, you know, take your loss right here, you can totally do that, but have a hard stop here. That way that you're like, okay, the trend has been forfeited. Let me go ahead and sell my position and save myself the extra, you know, 15 cents or whatever. But, you know, there's oftentimes you're going to see where it wicks down here and then comes right back up, and you don't want to accidentally get tapped out on a move that's just doing what the stock's, you know, natural movement would be. So yeah, after, you know, reassessing here and taking a look, you know, I would say that 835 down to 8.7 would definitely be the preferred zone. Profit targets can stay where they're at, and that would be about a $1 upside to a $1.40 upside, compared to a 30-something cent risk, which is, you know, really good risk to reward. Really good risk to reward. You could, even if you were like really nervous, move your stop even a bit further down to this level, where it's obviously key level of price based on these 2 bodies. And, you know, then use the mental level in these ranges as well, just to give yourself a little bit more wiggle room. We'll move it up here, and if we do get tapped out on some natural volatility, then, you know, the stop was too tight, and we learn. But that's one thing, I guess, that I haven't really talked a whole lot about, is I like to take into account, first of all, for profit targets, and when I would consider a play a win, as well as, you know, when I create my zones, is what is the daily range so far? If the ticker is $3 and it's gone from 320 to 340 all day, like that's still a pretty big gain as far as the chart is concerned, because it's such a small ticker. Or let's assume it went from $3 to $4, right? That's a whole dollar move on a, you know, that's a pretty significant move. It's like 30% of the or something like that, which is good. But you're not going to have a stop loss that's, you know, at 2.5, because in the grand scheme, that 50 cents means a lot more than a 50 cents on a ticker like this that's, you know, up $8 or whatever. So those are things you have to take into account as well. There was a play on Friday, ENVB, I believe it was called, where I took an 18-cent scalp. And I was like, that's a good move. And let me tell you why. Now, 18 cents, when you say that, people are like, dude, why even bother? Like, that's what a small move. But the stock only went from, you know, 340 to 380 on the day or something, or 390 on the day. It was like 50, 60 cents was its total range, right? And the fact that I was able to get 18 cents of that, you know, when you put it into that perspective, you know, that sings a different tune, right? That's, you know, a significant move. You captured like 20, 25% of the stock's movement on the day. So, you know, it's important to think of things in those terms with like the daily ranges and what have you. Give me 1 second. Let me let this dog out. Here you go, buddy. You good, homie? Cool. Anyways. So yeah, that's an important thing to consider. But again, excuse me, let me go ahead and hit play here. This should start moving here again pretty shortly. Let's go down to some other tickers to see if any of them are meeting that criteria that I mentioned, where they're going to be up above their pre-market highs. So this is not, you know, a little closer, but not quite. LKCO, no, it's actually a downtrend. I would consider that kind of a downtrend. Definitely a downtrend. Okay, so all of these ones that are downtrends like this, we can go ahead and just remove from the watch list. So now we have 4 tickers that we can focus on. This one's close. So let me go ahead and pause this here. This one's close. TRCH. So, you know, the pre-market high is definitely up here, right? But that pre-market high is, you know, just happened right before the bell. So I would actually be totally okay with identifying a level maybe down to maybe right here for these wicks. Plus major psych level. Perhaps 3.9 would be good. So this would give us, oh, look at that. This would give us a lot of opportunity to, you know, have multiple touches where, you know, that this 3.9 level was, you know, obviously touched multiple times, wicks and bodies. Up here is a little bit of a lighter area where it's mainly just price wicking, but still a key level. And then we can have a definitive stop, I guess, you know, probably down here below this forfeiture of trend. You could have it down here, but it starts to be you're looking at a 20-cent risk to reward on a $4 ticker all of a sudden. So maybe up here at the failure of this. That gives us VWAP, the 20, all this price action to break through in order for this move to fail. I guess our first profit target would probably be 4.2 here. As you can see on the 10-minute chart, those are some bodies making contact there. 4.27 right in there. And that would be a decent risk to reward. Range, taking profit at, you know, different increments of resistance. So, you know, it's paused right now, but it's still doing this movement because I guess it's loading or something. But let's, you know, it looks like we're not going to get tapped in now, but I usually wait anyways. But we'll put some bids just to see. This gives us essentially a 13-cent downside here to a 30-cent upside, 40-cent upside, so something like that. So yeah, let's go ahead and put our bids in. So we would do the descending bid ladder. Let's assume that this is a $10,000 account, okay? Just because it's very easy, whole number. We're risking 1%. Now in hot markets, you can sometimes risk 2%. Sometimes you can risk 0.5% if it's, you know, you're not comfortable with, you're trying new things out, you're just choppy market, what have you. We're going to do 1% today of a presumed $10,000 account, which would be $100 max loss per trade at that 1%. So the first thing I need to do before I make any bids is look at where my stop is in relation to my zone here, and that's 13 cents, right? 13 cents. So I can take about 700 shares in order to make this worth $100, this 13-cent gap. 700 shares puts me at, yeah, that's about it. So it would be 89 bucks for risk. So that's what we'll do, 700. So the first bid, it's 4 10-cent zone. So we'll do, if we're going to take 700 shares, let's do the first one at 4, probably one right here at 4. Let's do 700 shares. Let's do, let's give us 3 cents down. Another 2 cents down, so that's 300. We probably want to step this one up. So that's, 400 shares, and then we'll do a 300 share right here at the very bottom. Now you can move those up a cent or two if you'd like. That's up to you. But yeah, that's what we're gonna look at here. It's gonna be, so we have 100 at 4, 100 at 397, 200 at 394, 300 at 39, and that will give us our 700 shares total. We'll probably end up having a cost basis of close to 394, 393 based on that ladder. And then obviously our stop will be down here at 377. So let's 377. Put our stop right here. You see that? Let's say that at our first profit target, we want to sell half of our position. So let's do, that would be 350 shares at 4.2. And then 350 shares at, we'll hold the rest for, I guess, 434. If we don't see 434 happening, we can cancel that and sell. So let's do 4.3 to be safe here. So there you go. That's what our trade is about to look like. All of that is inputted. We will now hit play. Obviously, we don't want to actually have these ahead of time until we get filled, but because it'll potentially run us short if it's shortable. But anyways, that's what we got so far. Let's see if this move takes place. I can actually fast forward this a little bit, and we'll watch here. I actually don't use Thinkorswim for my executions. That's important to know. I use DAS, and I have hotkeys and stuff like that I use to make my bids and what have you. Let me turn on desktop audio so that you guys can hear that sweet Thinkorswim notification. If we do get filled. It might bounce off VWAP, but while this is taking place, let's take a look at what it looks like on the 5 and the 10. So this is a good looking ticker, right? You got all of this, the meat of this resistance and support and all this action that took place in the 10 over here. Going up, getting a decent sell-off at the open, which will allow us to catch a value entry down in this area. And if it maintains this area pretty well, look at that. You could have already taken 4 all the way up for 20 cents. But it's okay. We have our bids where we have them. Let's see if, you look at this over here and you're like, wow, it's going back up. It's going back up without me. But if you come over here to the 5 and the 10, you can see that this is, still trending downwards. So it's important not to get FOMO'd or giddy or whatever about, the ticker's movement on the low time frame chart, because it's already given that back. And over here, these are going to tell you the bigger story. These are going to tell you the average of a lot of things factored in together, whereas this short-term time frame is going to trade a lot more with some wild range. But we want to see this information consolidated into a nice, prettier chart. So we'll come here, and then this information consolidated into a prettier chart over here. So the 10 looks pretty solid here. We're hoping that it trades within this range and bounces. If it comes down below here, it will not be, trending up. Okay, we've been filled on, what is that, 3 3 bids here. See if we get this last one. We might want to move it up a cent. Let's do 391. 391 just in case. Oh, we're gonna get filled. Oh, rough life, rough life. So in order to get filled on a limit order, you have to have the ask come below your price, come to or below your price, in order to guarantee a fill. So we only got filled in 400 shares here. Let's go ahead and just have this play normal speed now, so that we can see what our move is going to look like here. So we're filled on 400 shares, right? So now we can come up to our profit target of 4.2. Sell 200. We can go up to our profit target of 4.3 and sell 200. Now, if it does come down to stop us out, it's going to fill this order along the way. So our 700 stop is still in play. So that's important to know. If it does fill us one more, we'll cancel these. And we'll put new adjusted ones to account for the additional position size. Maybe we'll go back to fast forwarding. Now, what does the information on the 5 and the 10 tell me? The 5 is now interacting with the 20. You know, the wick to fill the zone is something I really love to see. And, you know, the close back above the 20 means that level is being respected. That means the buyers that saw the price come below it thought, oh, wow, it's trading below the 20. This is going to be a good value add. This is going to be a good place where I can get the ticker for pretty cheap. And in doing so, pushed it back above the 20. Now over here on the 10, it looks like we're respecting these previous areas of price action, some supports and some resistances. You know, we're going to have to pay attention here to this, you know, this area, which is going to kind of have some confluence of the 20 on the 2, as well as the what would be the trend resistance. And, you know, we can corroborate with those different bits of information. Now we come over here to the 10 and we see that the 20 is actually in between the bottom of our zone and our stop, which is a good sign, right? Because that tells us that in order for price to fail, it has to go through all of this action as well as the 20 on the 10 in order to tap us out. So that's a good sign. We're going to test this trend line here. Now, if I didn't have these profit targets ahead of time, I would be like, oh my God, I need to close, right? I need to close out because it could test this line and fail. And oh, there we go. We got filled on one order. So that's like $50 or something like that, I think. Let's see if we can get filled in this 4.3. So now what you can actually do, since we don't expect this limit, oh, never mind, it apparently got filled. So that's a $124 trade with 400 shares. We didn't even get filled in full. The meat of our order didn't get tapped in. So we risked, you know, very little with 400 shares. Oh, wow, look at that. Great action, great action. The low of our zone, it came to 3.9. It came exactly to 3.9, and we didn't get filled. That's a shame. So right here is another instance for, you know, if it's a really hot market and there's a lot of momentum and you see these pullbacks back to a target of a resistance line, a previous price target, you could really quickly, you know, buy the market on that. And then if it goes down below this area, you can immediately sell the market for a small loss. But if it goes up, you can immediately just, as soon as it breaks this level, so you buy this pullback, and as soon as it breaks through, you hit sell market. Oh, and there you go. And we're out for another decent chunk of change. You know, we got another 10 cents or so out of it. Now, that's something that you can do if you're really quick and you're comfortable with the downside risk. It helps to have hotkeys so that you can be like, you know, 10-cent stop or whatever. But yeah, so right off the bat, we're able to get this great move and then take advantage of this you know, pullback as it's taking place, sell really quickly, and now we're done. Now we're just watching. Let's go back and look at SCKT and see if it went down to our previous level. No, it actually took off. Wow, nice. So now what do we do, right? Now that it you know, pretty much forfeit our plan here. How do we want to handle this? Well, now we can actually account for these pre-market levels that we spoke about. You know, is it likely that this ticker comes down, you know, is at $3 to fill us at this point? Probably not. But you can see that when I'm making these zones, I'm taking into account that the VWAP and the 20 SMA, I'm hoping that by the time price makes its way down to this zone to fill these levels of where, you know, the key levels and previous highs and stuff were, that at that same time that it reaches here, the 20 and the VWAP will be showing up to provide that support. And now I can, you know, definitively make my stop like, you know, probably down here below all this action. And, you know, that gives me a, you know, a little under $1.70 downside to a, you know, we could potentially make, I guess, that 12, that major psych level, some resistance there. Since we don't have a whole lot to base off of here, we could, you know, do major psychs all the way up. Or we could, even if we feel like we need some more profit targets, we could come over here to the 2. But if you look, those major psychs are basically the same thing. So, you know, that's a lot of confluence there. Let's go ahead and put some bids in here. And it looks like we're going to have to like reload this ticker or something because it's doing some wonky stuff. So let's assume that we want to take our position here, 11.25 to 10.60. So the first thing, again, we figure the distance to our stop. That's, you know, let's say that it's close to $1. We'll take 150 shares max. Now, obviously, you would adjust this formula to whatever your account size is. You know, if you have a $100,000 account, you can risk more than, you can take a bigger than 150 shares. But this is just a good rule of thumb so that I can explain it to you guys. So let's say we'll do 30 shares up here at 11.2. Now I have active trader open on this other window you guys can't see, but let's do 30 shares here. Let's do another 30 at 11.10. 30 at 11. So that gives us 60 more shares to go through. Or I'm sorry, 70. Then we'll do, you know, maybe we need to move those down a bit. Let's do there. Give yourself some room. Because again, this ticker has a lot of range on the day. So you don't want to, you know, bunch up your bids too close. 30, so that would be 120, and then we can do 50. Oh, I'm sorry. No, it would be another 30 to be 150 total. And we'll do that at the very bottom. So that now means that our stop loss is going to give us a loss of, you know, no more than $100. It's actually going to be a little less, but I think it's going to be somewhere around there. So again, we'll do 150 shares here as our stop loss. We'll place that stop loss right here. Whoops. Oh, I'm short. There we go. Sorry. So, yeah, 150. I gotta do it on my bid. And we wanted our stop. Where was it again? Down here at 9.8. 9.8. Okay. 9.8. Boom. There's our stop. So we can actually just hit the skip button to see if this would have worked out. Oh, look at that. Price did come down to our levels here. Let's see if we perhaps get filled. Go ahead and fast forward. OnDemand is pretty slow, as you can see, but so we would have gotten filled on, you know, a few bids here if we if I hadn't fast forwarded. I think that it, like, you know, it won't fill you retroactively. So let's assume that we were in, we would be in 60 shares right now, about. It could come down further. Let's see. But now, what do I look at the 5 and the 10? You'll notice that the 5, the VWAP, and the 20, they did end up coming to meet me in my zone, which is always a really great sign. The 10-minute chart is starting to make it to where VWAP obviously is going to be the same on all time frames. The VWAP is up here in the zone as well. Great sign. You know, the 10 can use that as a way to support, same as a 5. And the 10's 20-minute SMA is now peaking above where our stop loss would be, meaning that we do have that added support moving forward. If price does decide to peak out of our zone a bit, you know, that gives us an extra line of defense essentially before we'd be officially stopped out. So it looks like we got tapped in on 30 shares there. Not a big deal. You know, again, we're playing with small size because we're assuming it's a $10,000 account with a $100 max loss per trade. So, you know, decently well so far. Let's see if we can get filled any further. And as you start to get filled and price turns, oh, excellent. So we are in 120 shares now. We are now in 150 shares total. Our stop loss is down here. Let's say that we want to take 75 shares off up here at 12. So let's go up to 12. And now I don't actually know how to use bracket orders, but apparently it's a thing in Thinkorswim. If you're curious, you can look at that. Let's say 12 and 12.5, right? We'll put our bids there. Or I'm sorry, our sells there. So we're either going to get stopped out for a max loss of 1% of our account, $100 or whatever, or we're going to, you know, take profit at these levels. Now, all there is left to do is to assess the higher time frame charts and think, okay, well, what is this telling me? Well, you know, based on this action, it looks like it might want to come down a little bit further, meaning maybe I should have made this my zone and this my stop loss, right? You know, now that I'm seeing that, we could have done a zone like that, and then this could have been our take profit. So we could have had a zone potentially look like this. You know, that's information that, I didn't know, I didn't have at the time. So we're just assessing it based on what we've been given so far, but, you know, maybe that's something we can consider. I can look and see, okay, well, how are things reacting? On the 10-minute chart, we'd love to see this close above VWAP here, because that tells me that all this action that took place below VWAP wasn't really all that meaningful. That was, you know, people saw that opportunity to buy at a discount, and they pushed it back above. Good sign. If we can see this truly make a bottom of the trend shape, that would be amazing, because then we can, you know, add to our winner if we feel like, instead of scaling out up here at these key resistance levels. But, you know, these are just things once you're in the trade that you can think about. What you don't need to be thinking about is like, oh my God, it's coming against me. Oh my God, maybe I should just raise my stop. Look at my P&L, look how red I am. You know, those are things you don't think about at this point, because, you know, we've already inputted our commands, our orders, you know, we've done our part. Now we're just assessing, you know, so that if we do lose, we can say, okay, well, what could I have done better? Or if we do win, I say, okay, well, do I want to hold? Jesus, you good, homie? My dog just coughed up her lung. If we do win, we say, okay, well, do I want to size up here? Do I want to scale out? You know, in order for me to really assess what I'd like to do in those areas, I'd really like to see, you know, what this price action looks like if it does come up here. So if it rockets with one big candle, I'm going to be more likely to either add to my winner or not scale out at the first profit target, because I'm like, damn, look at it, it's moving, right? My average cost, by the way, ended up being $10.79. So right around here in this area, which is pretty good for a zone that's this wide. You got to remember that you're never going to be at true bottom unless you really like spread out your bids. So we're down here in this action. This is where our actual average cost is. So we're about break even now. You know, and we're just going to wait for the move to take place. And there's, you know, not really anything that we can do or control once, you know, we've input our commands. The computer's going to handle its job. We're going to look to the 5 and the 10 here and see like, okay, well, you know, it's possible that this action meets some resistance up here at VWAP, and then we see a lower move. And if that's the case, you know, this zone might have been better. If it does end up collapsing down here, we could have utilized this zone perhaps and gotten at least half our bids filled, maybe. You know, maybe we can, if this move does fail, we can assess a zone further down here at these pre-market levels. You know, there's just a lot of things that you can be thinking about. As long as you're not thinking about like, oh my God, the trade I'm currently in, what do I do? The answer is nothing. The answer is nothing. You either win or you lose. And because we've already figured that our max risk is going to be, you know, $100, you know, that's the worst that could happen to you. And if you are so emotionally attached to $100 that it's causing you to really be unable to sit and watch the trade without having to feel like you need to micromanage it or take some kind of action, then maybe you're sizing too big. You know, maybe you need to risk half of a percent as opposed to 1% of your account, something like that. Because you want to be able to sit here comfortably and, you know, assess the information that's being given to you without having to worry about, you know, what could potentially go wrong. Because we've already assessed that the worst thing that could happen is you lose that $100. And the best thing that could happen is that you make, you know, considerably more than that. And if you're still stuck in that process, then you know, you need to either assess what your total account is, or you need to perhaps you know, figure out if you want to risk maybe a little bit less until you get more confident and more comfortable with your position and your ability to your trade and your system and things like that. So one big thing is that, you know, I had the luxury of building the confidence in my system that I have now because I built it, right? Like I made this system, started back in September, and I you know, I kind of built this system from scratch. I mean, there was influences I had obviously and other traders and things like that. But I had all of that trial and error and all of that experimentation phase in order for me to, you know, make the system what it is today. I had the luxury of going through all of that, which is why I have confidence in it, because I know how it performs. I know the numbers. I know the back testing. I know the, you know, kind of the way we got here, right? You know, but people who are just picking it up or hoping to pick it up to learn and things like that, you know, they wouldn't have that same luxury of you know, all that data to go off of to kind of build confidence. So it's going to take a while of you seeing things work, of you seeing things not work, of you getting an idea for how often you're right, you know, what is a good price target and a bad price target, things like that. You know, and that's going to take some time. So now that we've seen this, we can say, okay, this is a big engulfing candle here. This is a good sign of a reversal. This looks like, based on the 5, that this would be the bottom of the trend. So you know what I'm comfortable doing now, and you don't have to do this, and you can do this mentally if that suits you better. But you can come down here to 1026, which is the low of the trend, and you can actually move your stop loss to 1026. And that gives you a much tighter stop. Because if price does come all the way back down now against you, you know, you don't want to hold through this, because it would have to take all of this out, come all the way back up just for you to sell. Now you can mentally have it here so that when it does break down to this level, you know, if you feel like the range could potentially wick you out. But that's something I like to assess a lot, because like if this truly is the bottom of the trend, like this chart is telling me, and my plan is to, you know, find bottoms of trends and get good value entries and ride them upwards. If this really is the bottom of the trend and it gets broken down, then I know that this is now the top of the trend, and, you know, I don't want to be in the move any longer because it's, you know, not going to go where I anticipated it going. But this does look good on the 5 and the 10. I mean, look at the levels on the 20 and the VWAP on all time frames being really, really well respected. And, you know, that's all good action. Let's see if we can get tapped out here. I actually might nuke this one and let price run a little bit, simply because, you know, this does look so bullish. Hopefully it fills me at 12. If it does end up coming back down into the zone, you know, maybe I'll consider making my price target a little bit lower. Yeah, because you see it got up there close. There was a lot of resistance. You can see that the sell volume is actually jumping quite significantly. But that tells me then, based on the 5 and the 10, that, you know, this could potentially be the top of the trend now. The only way for us to know is to, you know, wait for the rest of the data to kind of come forward and tell us what's taking place. Oops. Where was that at again? 12? 12. And then 12.5. So there we go. Again, nothing for us to do except assess the information as new information is given to us. Simply like our stop loss right here. I like that being where it is because, now, we're at a position where this could potentially be the top of the trend. There's no reason for us to take, a full loss on that. Watching right here, VWAP being respected pretty darn well on the 10 and the 5. The fact that we're breaking a little bit below the 20, means that we might get stopped out, but that's okay. If it does get up to reclaim that, that's pretty bullish moving forward. I would love to fast forward or like skip ahead, but unfortunately, it won't like fill my orders if that ends up being the case. I guess we can just, mentally know where they were at. Let's go ahead and skip because this might take 10 minutes. Who knows? So, oh, there we go. So price did, again, this is still the bottom of that trend. It looks like this is just a lower high and a lower low. So we're still in the move. Oh no, we did get tapped out here at 12. It looks like we did end up getting one sell off. But now that we have had, half of our positions sold, we can now move our stop loss up to break even, which would be 1067. Because there's, again, no reason. Or if you're really nervous, you can bring it up to like 11.5 or something if you want to, like especially in like knifey markets or where there's a lot of droppage. If you want to, guarantee that you're still going to make something off of what you still have on the table, you can move it up even higher. Like we had such a great entry all the way down here that, having a stop loss right here is not unreasonable. We could even make it the top of our zone, something like that. But there's no reason to expose yourself to downside anymore since this move has decided which direction it's going. I mean, this is the play and it's taking place. So with what we have left on the table, I would love to move my stop up to, 11.25. So go ahead and move our stop up here to 11.25. Now, if price comes against me, we still make, a decent little chunk of change on what we have left. So now the two options are, it's either, look at that. Look how it respected that price target line, that resistance of 12. Brilliant. We're either going to fill at 12.5 or we're going to get stopped out for, a gain down here. So those are when you are micromanaging your position and you're, thinking about like how to handle what's taking place as you're already in the trade. Those are the things you should think about. Not the aspect of like, oh my God, am I going to be wrong? Because, I think my win rate is like 6 out of 10 or 7 out of 10, 70%, something like that. So yeah, that means even on my best day where everything's going right, my strategy's killing it, I'm still going to count 4 out of 10 trades, 3 losses. You know what I mean? So you have to, or 4 losses or whatever. I don't know the real win rate. I have to look at my numbers. But, and a lot of that, though, comes into account with where you're having profit targets. So it's easy to say I have a 100% win rate system if I have my profit targets, 5 cents above my entries and my stop loss is $1 below my entries. Because obviously I'm way more likely to fill that 5 cents than that $1. So, it's important not to get too hung up on that. Once you have an identity with, what you like to do, and what your system does and what it does well and what it does poorly and things like that, then you can kind of mentally assess that quote unquote win rate, right? Boom, there we go. And we are out and we traded 150 shares, real light size. We risked at max $100 and we just made $251.90 on that trade. I mean, you could have made more if you wanted to scale out. Again, like I said, we saw this huge action up here, consolidation tight. This would actually, in a hot market, be a great place to add to your position and hold for that rally out. Now, if you added to your position and you were worried that it would come down, you could actually move your stop even higher up, maybe right here or to the bottom of this. That way, if it does break down below where that lowest point of consolidation was, you can get tapped out and you can take advantage of stuff like this. In hot markets, man, I love doing that. Adding to my winners is huge. So those are two examples. Obviously, we did well on both. That's not always going to happen, but hopefully that helps you identify zones, kind of what my thought process is while I'm in the middle of the move, and things like that. And it's important to know. I know a lot of people are like down on themselves, or feel like they're not making enough or they're not doing well enough right now. But it's really important to not compare your how you're doing today, this month, right now. Oh, it got halted. Today, this month, right now, to your best month ever. Let's say that February you had the greatest month of your life and the market was super hot. Well, right now you can't expect to do that well. You just can't. Doesn't matter how well you execute or how poorly you execute. There's just sometimes it's not an option just because the market doesn't have the volatility, doesn't have the range. A lot of really great traders will make most of their year within like a 3-month period. And then the rest of the year is them, small wins, learning experience, small losses, things like that. And then when things are really hot, they know to, okay, size up. We got to take advantage of this really, really good situation we're currently in. And it's important to remember that, right? That like this might just be those months where it's going to be slow. And, that's okay. That's okay. Because, you could have a November, December that makes your entire year. So it's important to remember that, I'm a big person about like, I don't like blaming the market conditions for how well or badly I'm doing, but there is some relativity of like my P&L and the dollar amount compared to the conditions in the market, because like you just don't have the same dollar amount value opportunities, some weeks as opposed to others. You just don't. It just doesn't work that way. Now, can you still do well performance-wise? Yeah, absolutely. Absolutely. That might be with 1/10 of the size. That might be, squeaking out $80 green days or whatever. But like you can still perform well in bad markets. Now, whether or not you make bank, is not always directly tied to how well you perform. So I hope that there's that distinction there and that you guys don't get too beat up on yourselves if like you had a great February and great March and you're having a bad, April and May and whatnot. So that's going to be it from me, guys. Hopefully this is fun. I got to talk stocks on a Sunday. So I will see you guys in the morning for some fun time and hopefully we do really well. Hopefully, small caps are moving and, hopefully next week we're progressing and we're having a week where we're all taking our abilities to the next level, and hopefully making money in the process. But I will see you guys then. If you have any questions, obviously you're always welcome to reach out. Otherwise, have a great rest of your weekend, guys, and I will see you then.